market action that's coming in. We have the management of Oswal Pumps that is going to start. It has opened up for subscription for today, and it will last till the 17th of June. Then remember this IPO. It has a total issue size of 1,387 crore rupees, out of which the fresh issue is going to be 890 crore rupees and an offer for sale for 497 crore rupees. And the price band is 584 rupees to 614 rupees per share. So that's the price band, and this IPO has opened up for subscription today. Is going to last till 17th, and we have Vivek Gupta, who's the chairman and managing director of Oswal Pumps, Subodh Kumar, chief financial officer of Oswal Pumps, joining us. Hi, good afternoon to both of you. Thank you so much for joining us. Vivek, let me come to you first then. Now, with the PM Kusum scheme, which currently accounts for 87% of your revenue, is due to expire next year. What is your detailed plan to replace this substantial revenue source, and how confident are you that the company can secure new projects and maintain its growth trajectory post 2026 without this critical scheme?
Definitely, by choice, we are continuing this PM Kusum scheme one because it's a huge opportunity out there. But definitely, we have lots of range, diversified pump business. We are into exports as well as we have a very big network. And presently, due to solar demand, we are losing our. We are not able to supply export markets and private market, because lots of, and our priority sector at present is solar market. So definitely we have lots of plan to, if any problem came in this scheme, which is definitely not expected. So we have we are thought there won't be any problem for any growth of Oswal Pumps.
Okay, so that's as far as the revenue outlook is concerned. But Vivek, despite reported rise in profitability, your actual operating cash flow was negative for the first 9 months of FY25. How do you explain the significant disconnect in profitability versus cash flow generation? And what specific actions are you taking to ensure that the sharp rise in revenue translate into positive cash generation rather than just paper profits?
Okay, if you see our last balance sheet, so we started in the current year direct government business. So government business working this receivable cycle is around 140 to 150 days, and definitely in coming years, government is thinking to reduce this payment cycle very aggressively, because for this solar pump installation, government want to install very aggressively and very big way. So definitely we are very sure about this receivable cycle. It will come down very drastically, and definitely in near future, we are going to our export market as well as the private market. So cumulatively, with this effects also, this receivable cycle will come down, because it's a first year we entered into government business. That's why this receivable cycle you are looking for.
Right. Also, considering the combination of negative or operating cash flow, extended receivables, and an impending expiration of your primary revenue scheme, some might raise concerns about the company's long-term financial stability. So what's your message to the investors and shareholders regarding the company's strategy to overcome these significant challenges and ensure its viability beyond the current government initiatives?
I'll let you know about that negative cash flow. So first I will explain you why this is looking at. So, as Vivek says, our debtor realization period is increased from last, if you compare with the last year, so it was 91 days. Now it increased to 140 days. And one first of reason is this, and the second reason, we are growing expandingly with the tailwind of this PM Kusum schemes. So now our revenue is approximately 1,065 crore compared to last year's. So that is operation growth is there, and because of the debtor realization period, slow debtor realization periods, the cash flow is slightly looking at negative. But if you look out our proceed which we are getting from the the market, which are from the capital market, we infuse 313 crore to repay our working capital debts. So this also generate the cash flow in the company, and in future, near future, definitely you will see the positive cash flow.
And even then we we should have will have around enough cash flow because 200 crore we are getting for GCB purpose, and even then in the coming quarters, government is getting healthy cash flows. So definitely we are very sure in coming time this cash flow will be highly positive.
Yeah, this is the transitional. Yes.
Vivek and Subodh, thanks so much for taking your time out and joining us here on ET Now. So all eyes are on this particular IPO, and primary market in any case is abuzz over the last few days. We will slip into a very short break, but we'll discuss many more buzzers on the other side of the break. Don't go anywhere.